U.S. stocks snapped their two-day losing streak and finished higher today after it was learned that the Federal Reserve left interest rates unchanged. In fact, Federal Reserve Chairman Jerome Powell later came out and stated that he does not anticipate any changes to interest rate policy anytime soon, and that it was difficult to get inflation above 2%. So that affected a number of markets. Of course, interest rates themselves fell. The 10-year ended at 1.79%. We also saw emerging market stocks rise rapidly, and we saw certain patches within the United States do really well, including materials, industrials, and technology stocks. In fact, our trade application example at the end of tonight's video will be a technology-themed application. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 11th, 2019. First of all, if you're new, welcome aboard. Remember to go to YouTube, click subscribe. While you're over there, check out our description area, sign up for our email distribution list so that way you can be sent notifications whenever we post these videos, and also learn which stocks in the S&P 500 are giving us overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. Please follow me at Brandon Van Zee. Lastly, we have a presence on Facebook. Check out our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and jump into the charts. As you can see, I've got chart 4B pulled up here in front of us. This will give us a good rundown as to what happened in the United States here today. And each one of these charts is looking at a 3-month time period. Each one of the candles represents one day. As you can see, all of our charts advanced here today at various rates. The smallest mover was the small caps themselves. They were up just 0.01%. The biggest mover was the NASDAQ, which was up 0.44%. All in all, it was a pretty solid day. We didn't have exaggerated movements like we sometimes do on Fed announcement days. Notice that the labels here on each of the charts is still blue as opposed to orange. Remember, they flip to orange when the daily range becomes larger than the average true range. And so anyway, today was quiet on relative terms compared to most other Fed announcement types of days. But for those of you bullish out there, you'll be happy to note that we do have bullish postures retained across the board. As you can see, the background colors of all these charts continue to be green as it stands right now. And of course, all those moving averages are also green, telling us that price is above a rising 30-day moving average in this case. So all else being equal, the path of least resistance continues to be to the upside for the U.S. stock market. Checking out a slightly different view, let's take a look now at our 3 green arrows angle. You'll recall that yesterday when we reviewed this, it was only the Russell 2000 that had a 3 green arrow signal. That is still the case. In fact, I mentioned that yesterday. We've got some work to do on the MACD histogram, and that's still the case. We did have a little bit of advancement. So as an example, notice here on the Dow Jones what the bar looked like on the MACD histogram yesterday, and now look at it the way it looks today. So we saw an advancement because those gray bars are trending back towards the zero line, but it's not until we cross the zero line that we would produce a green arrow, and that is the case with the S&P 500 and the NASDAQ composite as well. So most likely we won't get 3 green arrow signals tomorrow either. Perhaps Friday, perhaps Monday we have the chance at that, but for right now we'll just have to be satisfied with having 1 out of the 4 indices with the 3 green arrows set up, and that is the Russell 2000 small cap index, which has been doing a little bit better on a relative basis compared to the other indices up until today. As I mentioned before, today it was actually a little bit of an underperformer, so kind of stalled out a little bit as the others played a little bit of catch up there. Let's go ahead and take a look at another chart setup now. In this case, we'll take a look at the longer term view, 1040 crossover. This is chart 4C for those of you following along at home. Not a whole lot to report here other than long-term trends remain intact. All of our 1040 crossovers right now are considered bullish. The most recent signal crossover was here with the Russell 2000, which occurred back in October. Otherwise, we've been all systems go for bullish posture according to the way that we interpret these charts basically since the beginning of the year with all the other charts there. So for the most part, this has been a spectacular year to be involved in the United States stock markets, and we're looking at 20-30% types of returns, and sometimes that gets lost in the day-to-day activity of these videos. We are actually in one of the strongest years that that we've had in some time. And so we should all be joyous and thankful about that. We're going to end the decade on a very strong note, it appears. Moving right along now to our 12 grid analysis. So let's start with chart 5A. This is our asset class 12 grid. As you can see, we've got kind of a mix of colors out there. A reminder that when we're looking at these 12 grids, the background colors of the charts will tell you what is the current intermediate posture according to the market forecast technical indicator. And as you can see here, we only have two dark pink charts on the board, and that is the US dollar, which fell today by 0.37% and is now trending below a falling moving average. Note that the moving average color changed from yellow to red as of today with that big move lower. And then we also saw REITs really struggle. Now remember, in this particular presentation, we do have an ongoing bear call spread going on VNQ right now, so we're not necessarily disappointed by that action. In the REITs here today, it was down over 1% here and is really struggling getting up and over that moving average. You can see that that moving average for REITs has been downtrending for the last couple of months, and largely price is having a hard time getting up and through that area. So right now, path of least resistance continues to be the downside for REITs. Now you'll notice that the dark green colors on the chart represent SPY, the foreign developed stocks that you can see right up here. Then we've got high yield bonds kind of in the middle, and then oil down below. Those are our four dark green charts, which tell us that we have a strongly bullish posture, not just a weakly bullish posture. Many of those charts we've talked about in the past. One that I wanted to highlight here right now, just to make sure you guys were aware of it, and I mentioned this in the intro as well, but take a look at EEM. Wow, out of the blue. EEM had a spectacular day. It was up 1.46%. Remember, EEM represents the emerging market stocks out there. So think about stocks from China and Brazil and India and Russia. They all did reasonably well here today. So hopefully that's a good sign for risk appetite going forward. Let's go ahead and take a look at our next set of 12 grids. In this case, we'll go over to the U.S. sectors 12 grid. And hopefully that'll pull up. There we go. And as you can see right now, we've only got one dark pink chart on the board, and that is real estate in the lower right-hand corner. That was what I mentioned before. This is a slightly different view of real estate. The last one we looked at was VNQ, the Vanguard Real Estate ETF. This one is the Select Sector Spiders, which means that these are the real estate stocks that are only in the S&P 500. So these are kind of the larger cap ones, I suppose you could say. And as you can see here, the picture isn't much better. REITs are in a fairly ugly looking chart situation right now, bouncing down significantly from that falling moving average, which is now red, in addition to that dark red background color telling us that we have a strongly bearish intermediate posture according to the market forecast. Somewhat interesting to note is utility stocks actually ended up going higher here today. So that was a little bit of a surprise in that utilities and REITs oftentimes act very similar to one another. In fact, you look at those charts and the general direction of the charts looks very similar. So this was a rare one day off where those two had a little bit of competing interests, and the investors and traders out there found enough to like out of utilities to send them higher a little bit. It's not like it was a big day for the utilities, but just finishing in the green on a day when real estate was down nearly 1% is quite the accomplishment. So we'll see what happens going forward there. Otherwise, as you can see from the rest of the charts, it's green across the board. Energy does have that lighter green background, so it's still considered bullish, just considered weakly bullish. All the rest of the charts are what we would consider to be strongly bullish. As I mentioned in the intro, a couple of the stronger areas of the market today were the materials sector, which was up 0.75%, the industrial sector, which was up 0.63%, and then technology, which was up 0.68%. Those all were some of the leading areas. And of course, most of you are aware that those are some of the more cyclical areas of the market out there as well that tend to do a little bit better when we have open borders and free trading across the globe. So I'm not sure if that's reading too much into what may or may not happen this weekend between the United States and China, but nonetheless heading towards towards the weekend on a more solid footing than would have been the case otherwise. So it's good to see that information. And as I mentioned in the intro, we'll talk a little bit more about technology here at the end of this presentation, because there is one industry group within the technology sector that is absolutely on fire right now. Tons of great looking charts within there. In fact, we talked about that specific industry today in my factor-based swing trading class. So if I take just a moment here to go on over to the internet and say thank you to those of you that clicked like for me on yesterday's video. 91 of you chose to do that. Not quite to that 100 where I like to get them. So let me know if there's anything else I can do to earn the 5 seconds it takes for you to click like on that. Generally speaking, if we can get up and over 100 likes, we don't debate whether these videos are worthwhile or not. If the likes are less than 100, then we start talking back and forth on, whether we need to do these videos every single day or whether they could be just as useful on the weekend, one time per week. Obviously, we don't want to waste your time and we don't want to waste our own time. So this has to be a symbiotic relationship. And if you get value out of David and I's 2 or 3 hours that we spend on this each day, then we would encourage you to click like each and every day as well. Otherwise, one day down the road, who knows, maybe they disappear. Hope that's not the case, but we'll leave that up to you guys to decide. So if you want to support this product, click like for us on Twitter. Also, we had a great day of classes here today. I mentioned my factor-based swing trading class. Feel free to check out the recording there where we looked at a couple of bullish swing trading setups and a bearish swing trading setup as well. And then David taught his options inventory class here as well. Now tomorrow what we have on tap is I've got my question and answer session. So if you are a premium member of Market Scholars and you've been dying to ask me a question, tomorrow's your opportunity to do that. So I'll spend about 2.5 hours with my students tomorrow. And then later on in the afternoon, David's going to get his portfolio management with ETFs class going at 2 p.m. Eastern time. So lots of good stuff coming your way tomorrow. All right, back on track now with some of these 12 grid charts. Let's go over here to chart 5E now and look at the global stocks. Now remember, this first set of 12 grids here are going to be the largest economies out there. It doesn't necessarily distinguish between emerging and developed because in the case of something like China, it is still considered an emerging market, yet it has the world's second largest economy. So think of these as the biggest economies on this first set of 12 grids, and then the next set of 12 grids will be the next biggest economies. So as I mentioned before, emerging markets were kind of an interesting mover here today. So as we look at the individual countries now, as you can see, China had a massive day. It was up 1.87% across its entire index. While that's a nice move, notice down below Russia, which is also still considered an emerging market, was up 1.91%, just barely outdoing China. So really strong gains there in the emerging markets today. In fact, over here with Brazil, it was up 1.15% as well. Not quite as high as China and Russia, but nonetheless a very strong performance out of Brazil. So in the end, I think this is a very positive sign here for the markets as we're starting to establish more of a risk-on mentality heading into the weekend. And it just kind of feels like market participants are willing to kind of put their money on the line right now. And it's usually a sign of a healthy market. Right now, the only pink chart we have here is in the middle with India. And it actually had a decent day. It was up 0.78%. However, it remains below a slightly declining 30-day moving average, as you can see right here. But a couple more up days for India, and I would imagine that this would turn around and change from a pink to a green chart. So we'll keep our eye on that, but the takeaway is emerging markets stole the thunder here today. We've been talking so much about the developed markets over recent weeks and months that the emerging markets have kind of taken a back seat, but not today. Emerging markets were the story out there. Let's talk about the second group of 12 countries now, and in this case, this will be chart 5G. And as we look at these, here you can see there's only one pink chart, and this is actually a light pink color here, telling us that we just have a weakly bearish posture. It's not a strongly bearish posture, and that is Turkey. And as I mentioned in yesterday's presentation, I wouldn't necessarily read too much into the bearish posture here, particularly since price is above a rising moving average, and so it might be just kind of biding its time until it's ready to take off to the upside and play a little bit of catch up there. But as you can see, most of these charts did reasonably well here today as well. Australia had a really nice day. It was up 1.2%. Mexico was also up over 1%. It was up 1.76%. Remember, Mexico is also still considered an emerging market. You can also see that down below we had some nice looking charts as well. Taiwan was up 1.55%. That was an important candle there on Taiwan today because we got up and over this prior candle from back here on November 7th. And so that's a sign of a breakout after a bounce on the moving average here about a week ago. So that's a really good sign there because for a while it kind of looked like Taiwan was getting a little bit tired going sideways. And now it looks like it wants to make a renewed pathway higher on this uptrend that it has been entrenched in for so many months. I'll also point out Sweden. While Sweden is not a emerging market, nonetheless, it's a strong looking chart right there. Similar to Taiwan, we got up and over some of these prior candles back here in early November, and so we closed near the high of the session, and it would have been considered a breakout type of a chart there. So lots of good charts setting up all across the globe. Now, trying to do a little bit of a segue here into our trade application example, talking about Taiwan, one of the stocks that has been quite strong here recently, let's go over here to a chart 3A here. I want to bring up TSM. This is Taiwan Semiconductor right here, and this is one of the biggest semiconductor companies on the planet. Take a look at that beautiful chart right there. Now, they're not alone. There has been a number of semiconductor and semiconductor manufacturers really in significant uptrends. Our bullish trade that we took today in our swing trading class was in the semiconductor equipment space and is already doing quite well on a P&L basis, even just since we got into the trade earlier today, because many of these stocks continue to rally into the close today. But for today, I wanted to kind of show you, over here I've got the semiconductors pulled up and just kind of give you a sense of how I'm salivating over this entire industry group here. It's not just one or two stocks. Most of them look really strong. So here's Broadcom. Look at that nice move above a rising moving average. Here's ASML hitting new highs above a rising moving average. There's LRCX, is Lam Research, back above that moving average, back to a bullish near-term posture. There's NVIDIA, looking like it wants to gun for its old highs there. There's this one's not quite as strong, OLED, so I wouldn't necessarily put that in the category of the strongest, but here's another nice looking chart. Monolithic Power Systems, MPWR. So there's tons and tons of these charts that look like this within the semiconductor space. Now, one of the bigger semiconductor companies out there is Qualcomm. As you can see, Qualcomm also had a very nice day. It was up 3.42%. Qualcomm has kind of been all over the map in the past year or so as a result of some of its courtroom drama and some of its relationships with Hawaii and a few other foreign companies that are out there. So it's not a typical semiconductor company. Nonetheless, it's a very liquid and large cap semiconductor company that could be useful for our purposes in the video tonight. Now, what stood out to me with Qualcomm is, first of all, it was already in a significant uptrend after having reported its earnings back here in November, and then it kind of stalled out and fell right back down below that rising moving average. Now, note that that moving average was rising that entire time despite the stock coming down fairly significantly below that moving average. Now, after today, something has changed. Notice that the moving average color is green as of today, and the reason for that is price closed above that rising moving average. When it was yellow, all of these candles, price was below that rising moving average. Now we're back above it. That's a sign of strength. In addition to that, you can also see we have a bullish near-term posture. That background color of the chart is blue here, telling us that the near-term line on the market forecast is now bullish. Now, note that the green line down below, right here, the intermediate line, would also be considered bullish on Qualcomm here as well. So, this is kind of a rising tide lifts all boats type of a mentality here, where semiconductors have been one of the strongest areas of the entire market. Qualcomm is one of the leading companies within the semiconductor space, is very liquid, very well known, large cap company, and one that we could perhaps exercise our judgment and opinion on through the options world itself. So let me come on over here now to the trade tab, and I'll show you that I've got the trade pulled up already. What I'm using for this is the January monthly contracts that expire in 37 days. This is what we would consider a credit spread. Some of you would also call it a vertical spread. Some of you would call it a bull put spread. There's a number of different ways to refer to this type of a trade setup. But as you can see, what I've done is I've combined a sold 82.50 put in January with a long $80 put in January. The combination of those two things creates a credit. So some of you watched the presentation last night where we talked about a bear call trade, and that was the opposite of this. That was where you want the stock to go sideways or down. This is also a credit spread here, but this is called a bull put spread as opposed to a bear call spread. And in this case, a stock that goes sideways is perfectly fine as well, but ideally we would want it to go up. What you're asking this particular stock to do, and note that Qualcomm finished almost at $87, is you want it to stay above your short put strike, in this case 82.50. So you've got about, let's call it $6 or thereabouts of wiggle room. Maybe not quite that much, but anyway, you've got maybe $5 of wiggle room there, where the stock can, basically just go sideways. It can go down a little bit, or it could go up. What you don't want it to do is to go down, let's say, $5 per share. If that were to happen, then you would likely end up losing money on this particular trade. So as you can see over here, this is generating a credit of 57 cents. If I were to click confirm and send, you can see that the break-even price on this is just slightly below $82. So if you have an $87 stock and your break-even is at, let's call it 82, then of course you're looking at about a $5 per share wiggle room with this particular trade. Now another thing you can do once you've clicked confirm and send is just kind of verify what is your return on risk for your particular trade. So I've got my calculator here. I'm going to take $57, and again, this is just for educational purposes only. We're just doing one contract here, so $57 divided by 193, which is right there. And that tells us that our return on risk is 29.5. In other words, if you round it up, it would be a 30% return on risk, which is generally what we are shooting for with these types of credit spreads here. Now again, since we have the break-even price right here in front of us, another thing that might be helpful for you to do as you're considering various trades is just to look at where your break-even price is on the chart itself to make sure you feel comfortable with that particular level. So let's take a look at that 81.93 level on the chart. And that would be about right 81.93 right there. So basically that line that I'm kind of circling right there, if you're to use that kind of crosshairs there, that's where you do not want the stock to come back down to. So you're effectively saying that this stock could either continue bouncing higher or at a minimum just kind of go sideways to slightly lower. You do not want it to come down strong enough for it to breach this prior low back here on December 3rd and stay below those levels, because if that's the case, you're probably going to end up taking a max loss on that trade. So anyway, an interesting setup there of a company that's just barely outperforming the S&P 500 over the last 3 months of this chart, however, is setting up here nicely with this bounce around its rising moving average in an industry that is very, very strong right now. So let's go on over here to the trade tab. Let's click confirm and send again, and then we'll ship that one off, and we'll see if we can get filled first thing in the morning. All right, well, thank you for joining me here yet again tonight. Looks like the Fed left things unchanged, and that means that the stock market continues to cooperate with the bulls out there. Rose slightly today, but we remain heading higher into this very important weekend in terms of trade talks, and most stocks actually went a little bit higher here today as well, as long as they weren't real estate stocks. That was one of the few areas that finished a little bit lower today. But otherwise, as you look at your stocks in your portfolio today, you should have a smile on your face. So with that, I want to thank you for checking out the video. David should be back with you tomorrow. And if you got value out of tonight's video, remember to go on over to Twitter and click like there for us. We really appreciate that. Have a great night, everybody. Take care. Bye-bye.